You know, in 33 years of lending, I have seen some extraordinarily stupid things that people do when they're trying to either buy a home or get an investment property or whatever. But I got to be honest, I don't think it's really stupid on the borrower's part. The fact of the matter is a lot of loan officers don't do a very good job of coaching and educating their customers. So I'm going to talk about 13 common mistakes that we see all the time, and I'll try to give you some background on each one of these different items. So without further ado, let's just get into the list, shall we? The first thing I want to talk about are large purchases. Now, I've got a great story on this one. We were doing a loan when I was in commercial lending to two doctors who were building a surgery center, one of which was very frugal, very business minded. The other one was absolutely flamboyant. He spent money, and two very, very different doctors. So we were almost ready to close on the deal to build their surgery center when the flamboyant doctor decided he would lease a $750,000 Ferrari, and they pulled up in that all proud. Well, unfortunately, by adding that payment to the debt structure, it blew the whole deal, and we just weren't able to build the surgery center. So, anytime you decide that when you're looking for a loan and you decide you want to go out and do something stupid like buy a car or spend way too much money or take out a huge loan, don't do it. Talk to your loan officer. First thing that I would do. So next are really large transactions. Now, particularly ever since the Patriot Act in 9/11 of 2001, several laws were passed to where lenders and bankers have to really look a lot harder at the transactions that go through your bank account. So we'll usually ask for anywhere from 2 to 3 months worth of your bank statements. Any transaction, Fannie Mae basically requires us, any transaction more than 50% of your gross income, we've got to do what's called source it. So let's say that you go out and you spend a lot of money, have a huge transaction going through your bank. We've actually got to create a paper trail on that. And if we can't create the paper trail, most lenders can't do your loan, period, because the government really rides us on those things. So keep that in mind. Don't do any large transactions. Try to be very, very frugal during your loan approval process. Don't switch jobs in the middle of the loan process or even before you decide to start shopping for a home. Let me tell you a story, and this happened to a friend of mine. A friend of mine had decided they were going to go to a relative to borrow. They didn't come to us. They went to a relative who was a relatively new loan officer and didn't know a heck of a lot about our business. And our friend decided that she got a great job offer that was actually for more money. But here's the kicker. That job offer came with not a huge base salary and a lot of commission. So that was really attractive to our friend who was looking to buy the home. So midstream during the process, she picked up the phone, called her loan officer and said, "Hey, I've got this great opportunity to take this new job, but I need to make a decision pretty quickly. What are your thoughts?" And the loan officer, like an idiot, went ahead and said, "You know what? Go ahead, take the new job. No big deal." Guess what? The loan got declined, and she wasn't able to buy the new home because all of that, most of her new income was commission based versus salary based. So because it changed, the underwriters were very uncomfortable with it and actually declined the loan. So don't switch jobs. I don't care how much you hate your job, stick it out until you close on your loan and everything's clear, then make the move. Applying for new credit. I don't know if you've been to a shopping mall. Not many people go to those things anymore with Amazon, but I know when you go into a department store, sometimes particularly during the holidays, they'll say, "Hey, save 10% off of your purchase if you apply for our store credit card." Don't do it. If you're coming up on buying a home or trying to get a major loan like a refinance or whatever, or more importantly, if you're even in the process, don't do it. By adding those credit cards, it actually can lower your credit score. Don't do it. If you want to get the store card later after you close, fine, get your store card. But don't do anything like apply for new credit. Don't go out and try to buy a new car, apply for a new car. That shows up on your credit report that as an inquiry, meaning somebody's inquired on your credit report. And we lenders, we have to go through and document if new credit was opened with each one of those. And if we can't document it, that could be a problem for you. Just don't apply, period. Don't make it a big deal. Don't have any inquiries on your credit report, maybe 3, 4 months before you even apply, and definitely not during the process. Not having enough money. I swear to God, this happened recently. We had a pre-approval that came to us. Somebody wanted to get pre-approved for a loan. And when we asked for their bank statements, they actually had a negative balance in their bank account. I'm going to repeat that again. They had a negative balance in their bank account. They didn't have enough money. They didn't have the money for the down payment, the closing costs. And what a lot of people don't realize is that lenders require what are called reserves in a lot of cases, meaning they want to see anywhere from 3 or more payments that you have after you do your loan, just in case, when you first move into the house, you have a little bit of a hiccup. So, not having enough money, if you have not saved the down payment, closing costs, and reserves, don't even try to buy the house. You want to work to do that. Now, in some instances, you can get some help from family or somebody close to you with a gift, but don't go out half cocked. Do your planning first. Not providing what you're asked is a big deal. When a loan officer asks you for something, there's a reason for it. For instance, working on one right now that one of our loan officers is struggling to get bank statements from a client. We have to have those. Part of the requirement that we go through as a lender during our due diligence process. We have to get those bank statements. Customer, just for one reason or another, doesn't think we need them, so they're not providing them. Guess what? They ain't getting a loan. So make sure that when your loan officer asks something, don't only provide it, but provide it quickly and completely. Do it as quickly as you can. There's a reason they're asking for it. Help me help you. Well, that's what the loan officer needs your help with. So when they ask for something, damn it, give it to them. They need it. Here's one that very few people know about. It's called the FEMA 50% rule. Now, here's how this works. And this is mainly for real estate investors that buy fix and flips. They're going to buy this home. They're going to completely gut it. It's going to look great. But what they don't realize is if that house sits in a flood zone, FEMA, that handles all the hurricanes and things like that, they have a rule that if you buy a property in a flood zone, you cannot fix it up more than 50% of the value of the structure, not of the property, but of the structure. And most of the jurisdictions that I've been in look at the tax assessed value of the structure alone minus the land. So when you look at the tax assessment, you look at what they've got that tax assessed amount for the structure, multiply that by 50%, and you are not allowed to fix up that property more than that amount without actually going in and tearing down the house and building it back to regular code. So if you've got an older house that needs renovation and it's sitting in a flood zone, you are subject to the FEMA 50% rule. You can't fix it up as much as maybe you think. And I see investor after investor after investor go in and buy these houses near the water, particularly where I'm based in Tampa, Florida. They find these properties, they buy them in a flood zone, only to find out that they can't get permitting because of the FEMA 50% rule. Know your rules before you buy, particularly if you're a real estate investor. Outspending your budget. Now, we've got a couple that we're working with right now, and we've worked with them before. Wonderful people. And they wanted to kind of get a new house out in the country somewhere with a little bit of land, just their dream. That's what they wanted. But when we started to figure out their budget, they were able to afford somewhere in the $450,000 range. And that's what the realtor was firing them properties on. That's what they qualified for. All of a sudden, they start sending us houses that they find on Zillow or Realtor.com or whatever that are in the mid 500s. They're a full 75 to 100,000 above their budget. And then they got all upset when we said, it's kind of hard to qualify for that. Well, here's what happened. I got involved in that transaction. I started looking harder at it and said, you know what? We can get these people to really solid, more than 800 credit scores, no debt. We can actually get them into a house that's more expensive. I can make that happen. The problem is that was way above the budget that they set for themselves, and they completely got sticker shock, fell in love with one of the houses that they had sent us that really didn't qualify for. And you know what? They were outspending their budget. Know what your budget is and stick to it. So many people make that mistake. I don't want to see that happen to you. Don't lie to your loan officer. Here's another big one that really irks me. Here's what happens. Some of the stupid things that people do is they think we're not going to find out about things. Are you kidding me? We do a lot of due diligence. We kind of know tricks. When we see the bank statements, we see the credit reports, we kind of know what's going on more than you think we do. So when a loan officer asks you for something, Don't lie to them. And I'm going to tell you where really that causes a problem for you, the customer. Not only for us, the lender, but you, the customer. Now, we spend a lot of money on the due diligence process. We go through and, we're paying people, pulling credit reports. Those alone right now in 2024 costs me $72 a pop to pull a credit report on somebody. So when you lie to your loan officer, when you're giving them false information during the process, and then they bank on that information and go out and do things like order an appraisal, which you pay for, get a survey, which you're paying for, you really can, screw yourself because, hey, if the loan officer would have known these things up front, they could have actually coached you through and maybe even worked around those issues. Don't lie to your loan officer. Be upfront. If you know that there's some kind of bugaboo that's going to pop up during the process, don't waste your time or your valuable money without talking to your loan officer about each one of those boogeymen that might pop up during the process. Another big mistake that I see people making is they try to do it themselves. Listen, I've done this 33 years. If my car breaks down, other than maybe changing the oil or whatever, I'm going to take it to the mechanic. If I've got to have my appendix removed, I'm not going to do it myself. I'm actually going to go to the doctor to have it done. If I want to sue somebody, by gosh, I'm going to go to a lawyer. I'm not going to try to use LegalZoom to do something complex like that. So it boggles my mind when a lot of folks decide, I'm going to go on to some of these consumer blogs and learn how to do real estate investment or buying a property or whatever myself. Get a professional. Now, I will tell you this. In Florida, the barrier of entry for real estate agents and even loan officers is extraordinarily low. You got to pass a test. Honestly, it's not that hard. Make sure you're dealing with either realtors and loan officers that know their stuff, that have seen a couple of down cycles, that really know what they're doing. Because I'm telling you, everybody that tries to go out and say, I don't need a good realtor, get your pros. Those people know the ins and outs of the law. They know what boxes to check. They know what boxes not to check. They know the ins and outs of the process. Earlier, we talked about the FEMA 50% rule. Almost everybody that makes that mistake and falls into the 50% rule are trying to do it themselves because they don't know the law. They think they do, but they don't. So get a pro, stick with your pro, whether it's a loan officer, a realtor, attorney, whatever. Make sure that you're getting your pros in line and don't try to do it yourself. Failure to prepare is another massive, massive mistake that I see people make. They all of a sudden wake up one Friday morning, call a realtor and say, I want to start looking at houses. And they don't prepare. If you know that you're going to be buying a house or you're going to make a major financial move, call your real estate agent, call your loan officer, have a conversation about what you want to do 3-4 months in advance. Let me give you a good example for that. Let's say that you decided that you were going to get a gift from somebody, a big chunk of change to be able to put down, from somebody. Now you can get gift letters from your relatives or whatnot. That is allowable. But let's say you have a big chunk of money coming in. It probably makes sense for you now, if you're 120 days out, to go ahead and put that money in the bank so that it's part of the beginning balance on that first bank statement. That's part of the preparation. Making sure that you understand what you can afford with your loan officer. You've had that discussion. You've given them pay stubs, W-2s, tax returns, so that they can do the math for you and explain, say, hey, you know what? You're going to be able to qualify for X. And you don't start looking way beyond. It just makes a heck of a lot more sense to do it that way. Make sure that you prepare well in advance, work with your realtor, work with your loan officer to make those plans so that the transaction and everything is super, super smooth. I'm going to tell you what, a lot of times what'll happen is this, and this kind of comes in two forms. Number one, people will, and realtors are horrible about this, particularly rookie realtors that don't know what they're doing, will pre-approve a client, say this looks great, and then all of a sudden, I will get a contract out of the blue from the realtor that says, hey, we're under contract and we're closing in 10 days. That's really not enough time to get the appraisal back in many cases. Can we do it? Yeah, but that's really, really tight. Usually you want to make sure you're allowing at least 30, sometimes 45 days, depending upon the jurisdiction you're in, for that loan officer and the realtor to go through all the process, the title company, to get you ready to be able to close. So don't try to push for too fast of a closing date. Another huge mistake that people make, looking at only the rate. There's a lot more to a loan than just interest rates. I'm going to give you an example of that. For instance, the big thing right now in early 2024, at least in Florida, is new construction, particularly for these tract builders. So these big tract builders that build the big neighborhoods, they bought the land years ago at a lower price. Now they're slapping up homes, medium to lower priced homes. That's what people tend to be affording right now. Now, here's what also they do. They add a crap ton into the price of that home, as far as just fluff. And then they say, you know what, we're going to give you 15,000 or however much towards your closing costs if you use our in-house lender, meaning the lender that they own. And by the way, there's a lot of things that a lender can do. It's not only about rate. We can raise the rate and make some money. We can charge fees on the back end. We can do all kinds of things to make that rate go down or up or whatever. So you want to make sure that you have a good lender that you trust. But bottom line is this: when you go to one of those builders, trust me, they're building a lot of extra fluff inside of that, forcing you, kind of a poison pill, to go to their own lender, where they're making even more money on you. So I'm not saying don't do that, but what I am saying to do is don't just look at the rate, look at the fees, look at the terms, look at what's called closability, look at the experience level of your loan officer. Does this person really know what they're doing, or are they just kind of winging it? Are they telling you what you want to hear, or are they telling you the truth? I'd much rather have somebody tell me exactly what I'm facing and be honest with me up front, as opposed to giving me, I always tell people, I'll give you a quick no versus a long maybe. I don't want to go into a situation with a borrower and say, gee, oh yeah, I can get it done, no problem. And then behind the scenes, I'm like, man, how am I going to pull this off? But most younger loan officers, they get desperate and they'll try to say, hey, you know what? I can get this done for you, Mr. or Mrs. Customer. And then behind the scenes, they're like, God, how am I going to pull this off? So don't just look at rate, look at closability, look at the experience of your loan officer, look at the extra BS fees that they're charging on the loan estimate. Don't just look at the rate. So bottom line is this: I could go on all day long on mistakes that I see customers make. It's ridiculous. Some of the stupid crap that people do, not only the customers, and the customers do some, a lot of customers do some stupid stuff, but a lot of the loan officers do too. They just don't know how to educate the clients. Some realtors are the same way. I work with some fantastic realtors, but the problem is that there's a lot of other ones that'll call us that they want me to tell their customers what they want to hear, not the truth. And listen, go with a great loan officer, go with a great realtor, prepare yourself, ask questions, listen to what they're trying to tell you, take that advice, and don't do stupid stuff. We'll talk next time.